And we're live.
How y'all doing?
So I know we're doing better this week than last week because last week we did two runs of or 2 weeks ago. We did 2 runs of the live stream because the first one was live, but with no audio. So we checked to make sure the microphone was on, and we're good. We're good to go this time.
Yeah, it was like that classic commercial. Can you hear me now?
Yeah. Really. So how you doing?
I'm doing great.
How's the economy for you?
It's doing.
Yeah, still getting a paycheck.
That's right.
Yeah. That'd be awkward if you were like, yeah, I actually got let go today.
Got the pink slip this afternoon?
Fortunately not. All right, so let's jump in. The first one is one that you have.
Yeah, so this was an article from the Wall Street Journal, and this has kind of caught my interest. I've spoke to you about it in the past. I've known a couple of people who have mentioned to me that they haven't got their tax returns yet.
Yeah.
And even like from last year to this point, still haven't received it. And so that's been something that I've kind of like been interested in, and it seems as though it's kind of tough to find information on that, but I have stumbled upon it. And so this article was really short and lacked some of the, I guess, information that I have been wondering about, but it did shed light onto, yes, this is actually happening. And so basically it detailed that the IRS has fallen behind in tax returns. And last year they ended up forking out $3.3 billion in interest, and they will pay you 4% interest on your tax return.
4% interest?
Yeah. So
I mean, it's not going to keep up with inflation, but it's not bad. It's certainly better than a savings account.
Yeah. So if you're just planning on putting your tax return into a bank account, I guess just let the IRS hold it for a little while.
Yeah, no kidding.
So yeah, the next slide here, this was another article I was able to find. It was on the Business Insider, and it confirmed some of the same numbers about the 4%, but it's kind of described, when does this start taking place? You know, like, when do they start owing you money?
Yeah.
And that's after 45 days, they'll start paying you interest.
Huh. Okay.
So yeah, it states there 9.6 million in unprocessed tax returns, owing billions in refunds. So yeah,
that's quite a bit. So I know we had to submit a tax return to the city, and they said that they might take up to 90 days to get the tax return back to you, but I guarantee they're not paying interest.
No.
So yeah, that's interesting. I didn't actually know that they paid interest.
Yeah, I'm really interested in some of the questions that it poses. Like, is it a specific, area that they're lacking on, that they're being slow on? Like, is it people with children? Like, is there a certain facet that they're falling behind on?
Yeah, right.
Or is it just everyone in general?
Yeah.
And I guess that'd be my biggest question.
Yeah. So let us know in the comments down below if you or if someone that you know has actually not received their tax refund yet, and they submitted it before the deadline. So we're not quite 45 days past, but still, that's interesting. So the next one that I have is all about food prices and the inflation that's going on. Obviously, we've talked about inflation quite a bit. And a lot of people base inflation on the consumer price index, but I base it on the price of chocolate milk.
That's a good.
Yeah, it seems pretty reasonable. Yeah. So here on this next slide, we can see that milk prices are up 7.7%. And that's probably white milk. So chocolate milk's probably up even more than that because you got the added cost of the chocolate in there. Yeah.
Chocolate is mostly imports.
Yeah, so that's a real bummer. And it's not good for the economy.
No. What is your opinion of Yoo-Hoos?
So Yoo-Hoos, based on the video that I did here on the channel, where me and another individual that you and I both know, Steve, did a chocolate milk taste test. It scored the lowest on the chocolate milk taste test, but it's still good.
Okay.
In my opinion, I think it's still good, but I can tell that it's not chocolate milk.
Okay.
I can tell that it's got more of a watery base to it, but it's still delicious.
But I'm not a big chocolate fan, and that's what I've been hitting up lately.
Yeah.
Instead
Okay.
of Yoo-hoos.
Okay. Yeah. So definitely, it's good for a different market.
Yeah.
Yeah. But that takes us into the whole Fed raising rates just recently, actually. So they raised rates in March by 0.25%. And that was kind of the start of the whole Fed raising rates deal. Everyone was talking about how it's going to affect the economy. And it has. I mean, interest rates have been rising for mortgages especially. I haven't checked on credit cards or anything like that, but my guess is that is also the case. But they just raised rates again, 0.5 percentage point this past week. So they're really starting to hit it hard, trying to get this inflation under control because, I mean, inflation's just at a 40-year high.
Yeah.
And so it's going to be interesting to see how this continues to affect the economy and just people's budgets in general. So that takes us into the next one that I think is good news, especially if you're into saving nowadays, and especially if you have an emergency fund, and that is that banks are starting to increase their APY interest rate. So just the interest rate on the money that you're getting, or the interest rate on the savings that you have in those banks right now, which is great for everyone who's saving a lot. So it's a direct result of the Fed raising rates. Is it actually causes savings rates to also go up. So that's great.
Yeah.
And like I said, it's great for investors who are stockpiling right now. Here are all the banks that it mentions, or at least the big banks that it has mentioned, that are actually increasing their rates based on bank rate. Do you have any of those?
No, I'm a PNCer.
Okay.
I looked. I didn't see it in there. I read it a couple times.
Okay. Yeah.
Hoping.
I have. Yeah, we have Discover Bank. That's where our emergency fund is. And I did check it the other day, and it was up an extra 0.2%.
Okay.
Which is good. So it's up to 0.6%. Going on here, it says that Greg McBride, who's one of the leaders of bankrate.com, is talking about how it looks like it's probably going to clear 2% by the end of the year, which is pretty significant change in that amount of time, given that this is May.
Yeah.
And 2%, that's pre-pandemic.
Yeah.
Because we had our house down payment in Discover before the pandemic started, which was convenient timing since it was the whole down payment. And we were up to 2% in Discover. So, that was nice. It barely, at the time, barely kept up with inflation, but at least it kept our money liquid and we didn't have to, and we were still able to earn a little bit of interest.
That's the key, to have some liquid money in a savings account set aside, especially with the things that we've been talking about on this. So, yeah.
Yeah. And then it goes on and talks about how, emergency funds are a great thing to keep liquid, and which means accessible to you. And banks like this are especially good for keeping your emergency fund, because even though you're not keeping up with inflation, you're still able to earn a little bit of interest, just a little bit to keep up. So, and this is yours.
Yeah. So this is one that I added, and it's talking about, again, kind of what you said about the milk thing. We've seen it in our day-to-day lives. It seems like, just a few days ago, all of a sudden gas prices are going up again.
Yeah.
They had kind of come down, or I don't know, stayed where they were, but
yeah.
So it's due to rising oil prices again, obviously. And it says in the next slide there that rising oil prices account for more than half of the pump price. So more expensive oil means more expensive gasoline, of course.
Woohoo.
Yeah. Yep. So yeah, in the next slide, it talks about the average price for gasoline, a gallon, is $4.37 on Tuesday.
Jeez.
And that is up 47% from a year ago.
Yeah.
One thing the article was talking about is how I believe it's on the next slide. These records are similar to the 1980s during those kinds of economic times, but below the highs of the 2008 recession in terms of taking into account inflation.
Yeah. Oh, okay.
So
yeah, that's interesting.
Yeah.
Just driving into work this morning, I heard them talking about the gas prices in Ohio specifically, which is obviously relevant to you and I. But we just hit an all-time high in Ohio.
Okay.
And let's see, what was an average of $4.17 a gallon. And I want to say that they were comparing it to the previous high in 2011 of $4.15. And in Central Ohio, it's even more than that. It was like $4.35 or something, it's just insane. I can't even believe those prices.
Yeah, I know that I hadn't heard about Ohio, but I knew Michigan had hit an all-time high. So I figured that we wouldn't be far behind.
Yeah. Yeah. Shout out to Leroy, who's in the live chat right now. He's from Michigan, so I'm sure that he is enjoying the gas prices up there.
Yeah.
Yeah. Okay, so the next one is one that I have. This is interesting. Is talking about how with the job market, the way that it is, a lot of students are actually dropping out of college.
Yeah, this was interesting.
Yeah. And so going in here, it talks about how wage growth is up 5.5%, which is obviously still not keeping up with inflation, but at least it's growing. It's helping a little bit with the rising cost of consumer goods. But going on here, it talks about how the undergraduate enrollment is down 3.1% from last year and 6.6% from 2 years ago, which is pretty insane. I don't think that this is going to be so. I think that it's probably based on a number of variables, because obviously you've got wage growth in there and you've got a very hot job market. But also I've seen there is a lot of change in education recently. And I think there's going to be a whole lot more change, which is great, because the way that the student loan crisis is going on, it's up to, I think, $1.7 trillion in just federal student loans in the United States. That is insane. And so I think that has been shifting students to thinking a little bit more about whether they actually want to have $100,000 of student loans, or if they just want to join the job market right now.
Yeah.
So I found this article particularly interesting for that.
Yeah. You know me, I'm definitely a big guy for the trades.
Yeah. Well, me too.
Yeah. So when I see this, I'm like, okay, great. But it does seem like, we don't want to rush into that, just completely forget the institutions, because that could be a big mistake.
Yeah.
I would be interested to know what is enrollment like in terms of like institutions that offer degrees or certificates in the trades.
Oh, yeah. In
as
comparison
opposed to ones that don't, and what those enrollments would look like. So maybe we'll have to have a little follow-up next time.
Yeah, that'd be really interesting. Yeah. My guess is that obviously trades are probably going to be a lower percent drop in enrollment, I would think.
Yeah, I would think so, especially because if they are, skipping universities and going straight in, there are a lot of employers who, almost some trades you're forced to go, at least for, certain certificates.
Yeah.
So
yeah, that's a good point. So then later on in the article, it talks about how 31% of students actually plan to quit because of the increased employment opportunities, which is a huge percentage. I was shocked by that number.
That's a lot.
Yeah. And then it also talks about the possibility of lost wages in the future, which assumes that the job market stays identical to the way it is now, where a lot of companies require a degree. I think that as we move forward in time, more companies are going to turn to become more like Google and a lot of large tech companies, where you just have to prove that you can do the job. You don't even have to have a degree, you know?
Yeah.
So it'll be interesting to see how that goes. Obviously, $1 million of lost wages over people's lifetime is significant, but that's assuming that nothing changes.
Yeah, that's what I was going to say is, okay, so if there is a shift from universities to trades, you know, and if that shift is caused by increase in wages, then that may actually change by the end of it.
Yeah.
But $1 million is a staggering amount of money in the end. So
yeah, but also that's I don't know this for a fact, but that may not be taking into account the fact that trade workers can actually jump into the workforce much earlier with lower debt, if any, which is a huge impact on people's personal finances.
Yeah.
So that's a big impact as well.
Yeah.
And that's just a last look at, the individual. One of the individuals that's a part of this article is saying that it's good that people are finding work and stuff, but they're a bit concerned about what that means for the future, at least for young people. So, and then this is yours. This is the last one.
Yeah. So this kind of goes along with the whole, all what we've been talking about, but just this last article, it's not only enticing the young people, it's enticing the older generation. And so unretirement is becoming a hot new trend, which is not a trend that I would be ever willing to get into if I was retired.
Yeah.
I'd be like, that's for the birds for me.
Yeah.
So the next slide there, the level of workers who retired then came back a year later is running around 3.2%, just about where it was before the pandemic. So it's definitely convinced a lot of folks to come back out from work, whether that be the wages or one thing I question is, were some people more ready to retire because of the pandemic? Like, we'll just call it quits now, stay out of this crazy world.
Yeah.
And now they've realized that they can't, or realized that it's not so great at home. I don't know.
Yeah. Well, I mean, if you think about in terms of retirees, if they're living off of the money that they've saved, but that money is invested, especially recently with the drop in value of the stock market, that means that people's portfolios are losing value as well. So it actually makes a lot of sense, especially with the wage growth, to go back to work and live off of the money from work instead of living off of the money from your portfolio that's already at a lower value.
Yeah. Well, it's a double whammy with that, and raising prices just in groceries and gas, like we've discussed. So not to mention, obviously, more susceptible to medical bills.
Yeah really. I agree. I think we got one more.
So prices increased in March 8.5% from a year ago, according to the Bureau of Labor Statistics. So just the higher cost of living forcing people to go back in.
Yeah. Jeez. Well, that's it. I think obviously things are changing in the economy, and it's going to really benefit you right now to pay off as much debt as you possibly can and increase those savings.
Yeah.
Because, with the increased savings interest rate, at least that can help a little bit with the inflation side of things. But yeah.
Yep.
So make sure you like and subscribe and comment down below what you think about these articles, and let us know if there is an article that you think would be beneficial for us to cover in the next live stream.
Yeah.
We appreciate it. So we will catch you guys on the flip side.
See you then.